Hello. Today morning, the RBI in its monetary policy statement continued its process of recalibrating the monetary policy rates, and in effect, they've increased the repo rate by 25 basis points to 7.75%, and at the same time cut the MSF, the Marginal Standing Facility, by a similar 25 basis points to 8.75%. This is in line with what they had outlined and what we had told investors in September, that the process of recalibrating the monetary policy would continue till the time the difference between the repo rate and the MSF rate is at 100 basis points at 1%. With today's move, with repo at 775 and MSF at 875, we believe that RBI has completed its process of recalibrating monetary policy, and from going on, the repo rate would become the signaling tool and will become the operative rate for all monetary policy actions. Under Governor Rajan, the Reserve Bank has been very clear in terms of its statement of intent. It said that they would not fight FX or exchange rate depreciation, exchange rate volatility through liquidity changes or interest rate changes. To bring about a stability in the FX markets, they have instituted two facilities. One was oil companies in India borrow in the FX market, and they have a huge demand, which sort of leads to a rupee selling off during volatile periods. The RBI has created a facility where they can provide dollars directly to the oil marketing companies, which meant that oil demand was out of the FX markets. At the same time, to improve inflows into dollar inflows into the country, they provided concessional swap facilities to banks to be able to raise non-resident NRI deposits and overseas bank borrowing and bring that money back to India. So with those two facilities that they started, we've seen the rupee reverse its direction. It has appreciated significantly since then, and it trades with a lot lower volatility. Having seen that, the RBI then started cutting the MSF rate from 10.25% to now what we know at 8.75%, and has ensured that money markets remain stable, and we come back to the old operative policy of repo being the signaling rate and the MSF being at 1% higher than the repo rate. At the same time, we would also understand that the repo rate before July was 7.25%, and now in two monetary policy meetings in September and today, it has been raised by 25 basis points each, so total of 0.5%, 50 basis point increase, and the repo now stands at 775. That has been done clearly to signal an intent from the RBI that inflation is increasing, inflationary expectations are rising, and the RBI has to react so as to protect the consumer from lower real rates or protect from high inflation. So we've seen a 50 basis point increase in the repo rate. We believe that given the inflation trajectory and given elections being around the corner in terms of liquidity outages, we do not completely rule out another set of rate hikes from now till March 2014. It will depend on how the inflation increases. But as we see the increase in food prices or even the increase in manufactured commodity prices, we believe that there could be some more hikes in the future by the RBI. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.